Hello guys, you're welcome to my classroom. Today, we shall be discussing the topic taxation. The focus here is to explain the rudiments of taxation with special reference to Nigeria. The base of public finance management is revenue generation, and tax is one of the most important sources of public revenue globally. In Nigeria, tax is the second most important source of public revenue after oil. The lecture is therefore to expose the students of public financial management to various aspects of taxation with special reference to Nigeria. At the end of this lecture, the students should be able to define tax and taxation, identify the various types of taxes, identify the rate structure of tax, distinguish carefully and correctly between tax evasion and tax avoidance. Explain the basic concepts in taxation such as tax equity, tax efficiency, incidence of tax, and also explain the role of FIRS in the Nigeria tax system. You are welcome. Straight on, we are going to start by looking at the concept of tax and taxation. Like I said, tax is an important source of public revenue globally. Most countries of the world, they depend heavily on their tax revenue for their livelihood. In Nigeria, tax is the second most important source of public revenue after oil. Actually, here, oil is our major source, our main first source of revenue, and this is followed by tax. So, what is tax? Tax has been defined variously, but put in a very simple way, it is a mandatory fee or financial charges levied by any government on an individual or an organization to generate revenue for government for public works. So tax itself is a levy. Then what is taxation? Taxation is the practice of a government collecting money or tax from its citizens to pay for public works. So taxation is the practice, while tax itself is the levy that government impose on individuals, on corporate entities that are existing in the country with the sole aim of generating revenue to carry out its various responsibilities. Why do government impose tax? Is it that government just like to impose tax to punish the citizens? Why do they impose tax? There are numerous reasons why government of a country impose taxes. The first reason is to generate revenue for capital and revenue expenses of government. Without money, government cannot carry out its responsibilities. But apart from the revenue function, tax serve other purposes. For example, tax can be used to encourage certain sectors and discourage some other sectors in business. It can be used to encourage sectors that are referred to as the productive or the leading sectors that can lead to economic growth, while discourage sectors that tend to retard growth. It can also be used as an instrument to discourage importation of certain goods and also encourage export. This is with the aim of actually having a favorable trade balance. It can also be used as a tool for income redistribution. This is the aim with the aim of reducing the income gap between the upper income bracket and the lower income bracket. And tax itself again can be used as a tool to protect infant industry, young industry that are coming up. Tax can be used as an instrument to protect them from stiff competition from already established industries from foreign countries. It can be used to influence consumption pattern. Some goods that are described as undesired goods, harmful goods, taxation can be used, or tax can be used to discourage their consumption. Also, tax can be used as an instrument to prevent the country from being used as a dumping ground. It can also be used as a retaliatory measures in foreign trade. And also, another very important function is that it can serve as an anti-inflation or anti-recession measure. Now, let us look at the broad classification of tax. Tax has been classified variously in various ways. But in most cases, tax can be classified based on who paid the tax, who bear the burden, the extent to which the burden can be shifted. There are some cases where the tax burden can be shifted. There are some cases where the tax burden cannot be shifted. On the basis of this criteria, tax can be classified into direct tax and the indirect tax. The direct tax actually is that type of tax in which the taxpayer actually bears the burden. In this particular kind of tax, the person that gave out his money as tax suffered the consequences of welfare loss or reduction in disposable income. He is unable to transfer such burden to someone else. So in such a case, that tax is regarded as a direct tax. But in the case of indirect tax, these are kind of tax in which the tax burden can be shifted, like we are going to see later when we are discussing the issue of incidence of tax. To what extent can you actually shift such tax depends on some prevailing economic conditions. So it is called indirect tax because the person that gave out his money to the taxing authority may not be the one that actually suffer the welfare loss. That is why it's called indirectly. It's indirect tax. So these are the broad classification of tax. So having known the broad classification of tax into direct and indirect tax, let us now look at those tax or taxes that falls under the direct tax and those that falls under the indirect tax. In the case of the direct tax, we have the income tax. This is the tax that are levied on personal income. We have the salt tax. This is a steeply progressive tax over and above the normal tax. It is imposed on high income earners and above the normal income tax. Then we also have the corporate tax, which is tax levied on the profit or the income of corporate entities, companies. So it's normally called company income tax. Then we also have the capital gain tax, which is tax imposed on the increase in the value of assets. Then there you also have the estate duty or the debt duty, which is tax imposed on the estate bequeathed by a disease. And also the stamp duties, which is tax imposed on legal documents. Then on the part of the indirect tax, we have the excise duties, which are tax imposed on goods that are actually produced domestically. We have the export duties, tax imposed on goods that have been exported across international borders. We have the import duties, which is tax that are levied on goods that are coming to the country from foreign countries. Then the last one there is the value-added tax, which is today a very hot cake in Nigeria because it's generating a lot of controversy as to who actually collects the value-added tax, whether it's the federal government or the state government. That issue will be addressed in another lecture, who is actually to collect the tax. But this is a tax that is a consumption tax that are levied on stages of production. So let us now pause for a while and have a self-assessment of these following questions. What do you understand by the term tax? What are the importance of tax to a country? Distinguish between direct tax and indirect tax. Now, what are the merit and demerits of direct tax? The merit here advantages are one, it is based on the principle of ability to pay. That means there's concept of equity at play in this particular tax. Then there is certainty, the amount you are paying as tax is known. And also it is very economical to collect. The cost of collection is low. And there is flexibility in direct tax according to the need of government. And one good advantage of the direct tax here is the civil consciousness. The taxpayer is aware that he's paying tax, so he can claim that ownership that I'm paying tax, and of course he can be happy I've paid tax. He can call himself a taxpayer because he knows that money have actually left his coffer, and he has a document to show that he has paid to the government. Then the disadvantages are one, it could serve as disincentive to hard work. The argument here is that when you are climbing to a higher ladder of income, your tax liability increases. So knowing that you are going to pay more tax when you work hard and get more income may serve as a disincentive to hard work. Then two, it is unpopular. Knowing fully we're having that civil consciousness that I'm paying tax and seeing the amount that is being reduced from your gross earnings, thereby making your disposable income to be smaller, people are not, you may not be happy. Nobody's actually happy paying tax. Left for anybody, nobody will want to just pay tax. Then there is higher rate of imperfection in tax assessment. In the case of direct tax, individuals are assessed based on their ability to pay. And this assessment at times, there could be errors. That's why we say there's imperfection in that. Then there is higher case of that tax evasion. People may evade tax, like we are going to see later, the full concept of tax evasion. Then there's also high case of tax avoidance. People are more prone to trying to reduce the amount they are paying under the direct tax compared to the indirect tax. So let's also look at the case of the indirect tax. The advantages, one, is that it is convenient to pay and collect because you don't even know when you pay it. You don't even know, so it doesn't actually cost government much to collect it. Then it discourages consumption of harmful goods because these are consumption tax. Some of them are consumption tax. So you can impose selective tax on goods that are harmful, and the price increase can discourage consumption. Then tax evasion, tax avoidance is absent in this case, except you want to isolate yourself from such consumption of those goods, then you cannot evade or avoid tax. Then it can be useful in correcting BOP, particularly the import and export duties. It can be very useful too for correcting BOP problem. Then it is useful too for economic policy. It can be used to fight inflation, it can be used for economic stability purposes. But the indirect have some disadvantages in the sense that the consumer actually suffers because the tax body is actually upon the consumer at the end of the day because it can be shifted. Then there's this lack of civil consciousness. You may not claim ownership because you don't even know when you pay the tax most often. Then there's distortion in resource allocation based on this indirect tax on the economy. Then there is tendency to generate inflation because when you impose indirect tax and the tax is being shifted in form of higher prices to the next economic agent, price generally may rise, which will become inflationary. There is regressive in nature in the sense that everybody, irrespective of your income bracket, will pay the same levy. Then cost of collection may be high at times, depends on the nature. For example, some substituted tax such as import, export duties at times can be very high cost of collection. They can lead to higher income inequality. Since everybody is paying the same tax, then the poor can become poorer, thereby widening the income gap. Now let us zero our mind to those type of taxes that are very popular in Nigeria. We have about 9 of them going by the FIROS statement. One of them is the company income tax. Here, about 30% of profits of companies registered in Nigeria are collected as tax. Then for the VAT, it's a number very popular, like we hear it on news every day, 5%. Withholding tax, that's retention, 5 to 10%. Petroleum profit tax, which is actually a very big area for government, the tax here is about 65.75% collected from joint ventures in their first 5 years of operation, while it increased to 85% for joint venture when they are over 5 years. Then for those companies that are under contract sharing, their tax is normally 50% of their profit. Then the personal income tax, that is the income levied on individuals, range between 7 to 24% based on different categories. Then the stamp duty is actually based, can be ad valorem, it can be specific based on the value of the item. Then you have the capital gain tax, like we explained before, the tax on the increase in value of an asset. In Nigeria, 10%. Then we have this tax again, which is National Information Technological Development Levy, which is actually a tax imposed on ICT companies. So here the tax is about 5% of profit before their corporate income tax. Then we have the tertiary education fund, which is tertiary education tax. Here is an innovation in Nigeria. 2% of profits of all companies registered in Nigeria is going to the government coffer. And this money is used to fund the TED fund, the tertiary education trust fund. So these are some very popular taxes that have been collected in Nigeria. So let us look at the rate structure of tax. The rate structure here is talking about the reaction of the tax rate to changes in the tax base. Tax base is talking about the item upon which the tax is levied, while the tax rate is the amount charged as tax, the ad valorem, which is a percentage. So we have about 4 types of tax structure, rate structure, which people normally classify also as type of tax, but it's actually type of rate. So we have the progressive tax rate. In this case, the tax rate increase as the tax base expand. As the tax base increase, the tax rate will also increase. So it's called progressive. While the regressive tax rate is a type of tax rate that decreases as the tax base increase. As your tax base expand, as you get more income, the less your rate of tax will be paid. Then you have the proportional tax rate. This is actually a type of rate structure in which the rates paid as tax remain constant irrespective of changes in the size of the tax base. Whether your income increase or your income remain constant, the percentage you pay as tax remains the same. We should understand we are talking about percentage, not absolute amount. Then you have the last one, which is the digressive tax rate. In the digressive tax rate structure, in the initial stage, at the lower income level, the tax rate is progressive. That means as your income base expands, your tax rate increase. But it gets to a point at a higher income level, the tax rate become constant, flattening up. So when you are drawing the graph, you're going to see that the graph will be increasing up to a point, now flattening away. So these are rate structure, which people normally call type of tax, but like I said, it is type of rate tax. So let us now turn our focus to some basic concepts as used in taxation. One of such concepts here is the concept of tax equity and tax efficiency. The tax equity relates to how the tax burden is distributed among the taxpayers. In this case, they are saying that treat like likely. People who are equally situated before tax should be equally situated after tax in terms of economic welfare. So to ensure this tax equity, we normally have the horizontal equity and the vertical equity. In the case of the horizontal equity, we are talking about people on the same level. When we are saying the same level here, it may not necessarily be just income level, but there are a lot beyond just the income level. So most often we classify it as capacity to enjoy from a given income. People may have the same income level, but not have the same capacity to enjoy based on maybe number of dependents, maybe insurance payment, maybe educational payment, medical payment, and so on. It may make somebody who is on equal level may not have the same welfare. Then we have vertical equity, which talks about people at different income level. So people that are equally situated horizontally, they have to be treated equally. While people situated vertically, they have to be treated equally. So tax is said to have equity when this principle is followed. Then you have the tax efficiency. The tax efficiency here is talking about the excess burden of tax. We call it deadweight loss. Deadweight loss, which tax is actually imposing heavy burden on the taxpayer, on the economy. So the tax that imposes the least excess burden is said to be most efficient. So when comparing two taxes in terms of efficiency, the one with the least excess burden is regarded as the most efficient. So let us look at other concepts. Here we have tax avoidance. Tax avoidance simply refers to reduction of taxable income or tax or through legal means, using legal means to reduce the amount you are going to pay as tax. While the tax evasion is an illegal reduction in taxable income, concealing information from authorities. That means tax avoidance is legal, tax evasion is illegal. Then you have the incidence of tax. Here we're talking about how is the effect of a particular tax distributed in terms of economic welfare? To what extent can we actually shift tax burden? Like we said before, in the case of direct tax, the incidence of tax fall on the taxpayer. That means the taxpayer bears the consequences. But in case of indirect tax, the incidence of tax you may be able to shift. That means the statutory incidence, that is the suffering of the original taxpayer, may be shifted to another person who now bears the economic incidence. So, but in most cases, it is not all cases that you can just shift tax. So the extent to which you can shift tax depends on what time. The short run may not be able to shift, but in the long run you can shift. Then it also depends on maybe elasticity of demand and supply. When demand is inelastic and supply is elastic, then you can shift most of the tax burden to the consumer. But when supply is inelastic and demand is elastic, you can shift the burden, or the seller, the supplier cannot shift. So what we are saying is that the extent to which you can shift incidence of tax depends on the elasticity of demand and supply. The one out of the two that have inelastic demand suffers the consequence. If demand is having an inelastic demand, then it can be shifted to the consumer. But if it is supply that is inelastic in supply and demand is elastic, then you may not be able to shift the entire tax body to the consumer. So elasticity play a lot of role in the ability to shift tax. Once again, let us pause for a while and also exercise ourselves with this assessment. Briefly discuss the merit and demerit of direct tax and indirect tax, and distinguish between tax evasion and tax avoidance. So lastly, let us now examine the agency responsible, particularly the federal level, for tax collection and assessment. In Nigeria, it is the Federal Inland Revenue Service. So it's a body that has the responsibility to carry out assessment and collection and also account for tax revenue accruable to the government or the federation. So this agency, this commission or service was established via the FIROS Establishment Act of April 16, 2007. So the service, that is the FIROS service, is being managed by the FIROS Management Board. So there's an act which I will always recommend. You can download the act of 2007, FRS Act, Establishment Act of 2007, to see a detailed analysis or detailed information about this FIROS. So it's normally responsible at the federal level, while at the state level, they have various boards of internal revenue. The boards of internal revenue play the role of the federal revenue at the state level. So they are the ones that carry out the functions in terms of assessment, in terms of collection, in terms of accounting for the, the revenue accruable to these various governmental agencies. Now, what are the functions of this FIROS? The functions are contained in Section 8 of the first schedule of the FRS Establishment Act of 2007. So if you go to that act, you're going to see the function. I'll just highlight some of them here. You can get more functions from that Section 8 of that first schedule. So the key functions here are: one, assess persons and companies on chargeable tax. They actually are the one that assess how much persons and companies can pay at the federal level. Then they are in charge of to collect, account, and enforce payment of taxes. They review tax regimes in collaboration with relevant ministries. So, and also they perform that important, which is to conduct regular examination and investigation to ensure tax compliance. So they can enlighten people, they can try to throw more light on the various aspects of tax. All these are to encourage persons to be tax compliance. They're actually in charge of such regular examination. They go into the books of various companies of individuals, that is proprietors, to investigate their books to ensure that they are paying the appropriate taxes to the government. Then they also determine the extent tax evasion and tax fraud affects government revenue. Tax evasion and tax fraud is a very phenomenal problem. They actually reduce the amount of the government actually generate from revenue. Like we know, voluntary tax compliance is very, very low in this part of the world. Voluntary tax compliance is low. So there are a lot of tax evasion, there are a lot of tax fraud. So the extent to which this fraud, this crime, because it's criminal, affect government revenue is examined and determined by the Federal Inland Revenue Service. So far, we have been able to examine various aspects of the topic taxation. At least by now, we should be able to define tax as well as distinguish it from taxation. And also, we identify the broad category of taxes, direct and indirect tax, and the various taxes that come under each of them. We also examine the advantages and disadvantages of direct tax and the indirect tax. Also, we throw light on the rate structure of tax in Nigeria, which I said some people always classify as type of tax. The type of tax is direct and indirect tax. Then the other one they classify is the rate structure, how the tax base react to the tax rate when tax base changes. So by now we are aware of that. And also we were able to distinguish between tax evasion and tax avoidance. One is a legal way of reducing tax, the other one is the illegal way. The tax avoidance is the legal way, the tax evasion is the illegal way of reducing tax liability. Then we examine other concepts such as the concept of equity, efficiency, and incidence of tax. And also, we talked about how elasticity influence the ability to shift tax or not. And the last aspect, we looked at the FIROS, Federal Inland Revenue Service, as the umpire in terms of tax in Nigeria. We look at their function. So, like advice, you can download the act, the establishment act, where all these functions are contained, and then you're also going to see other things like the function of the management board that actually regulate the service. So I will leave you with this tutored mark assignment. There are three. Like my students, they should be able to write this and submit before the next class. I've got some positive response from the previous assignments, and they did well. So also do this before the next class. Thank you very much for your time. It was a nice time being with you. Till I come your way, same time, next lecture. Have a blessed day.